Suppose A sells goods to B on credit basis for rupees 1000. And on the same date, I am to say on 1st January 2012, A draws a bill on B for 3 months. And on 1st February 2012, the bill was sent to the bank for collection. And due date, the bill was dishonored and the noting charges were rupees 50. And what is the due date in this question? Naturally 4th of April 2012, because this bill was for 3 months and add 3 days of grace. Now the main question is, on the due date, I mean to say on the date of maturity, who was the holder? Bank was the holder of the bill, because bank was keeping the bill for the purpose of collection on the due date. So on due date, bank was the holder. So who will go to the notary? Naturally, bank will go to the notary because bank is the holder. Now, the question is, who will pay the noting charges? Bank will pay the noting charges because bank is the holder. I am to say bank is the holder of the bill. But be careful, if bank pays any noting charges, that's not the expense of bank. Bank will recover this money from the drawer. So, you can say the bank is paying noting charges on behalf of A. One thing more, you must know, if you are the drawer and you have got a bill and you want to send the bill to the bank for collection purpose, it doesn't mean that you can go to any bank you find on the road. You can go to only your own bank. I mean to say the bank where you are keeping your accounts. Generally, every bank provides this facility of collection. So let's move to the question. This is a case of dishonoring of bill. And after due date, B contacts A and requests A to draw on him a new bill for rupees 1000. And A agrees with this arrangement. But the thing is, who will pay the interest for 2 months? Because the payment of A has been delayed by 2 months. If A draws a new bill for 2 months, it means his payment will be delayed. So he must be compensated for that. And that compensation will be called interest. So who will pay interest? B will pay interest to A. And it was decided to add 12% per annum interest to the bill. So it's a new cycle now. A draws a bill on B for 2 months for rupees 1000 plus noting charges of 50 plus 12% interest. Before you start the question, you must calculate the interest. Generally, the interest is calculated on the face value. So 12% per annum for 2% on rupees 1000 will be 20 rupees. Means 1000 into 12 upon 100 into 2 upon 12. That is rupees 20. So the value of the bill will be 1070 rupees. And this new bill was endorsed to C on 10th of April 2012. Be careful. Let's assume that A draws a new bill on B on 10th of April 2012, and on the same date the bill was endorsed to C, and on the due date the bill was duly paid. And what was the due date? That will be 13th of June 2012. One thing I must tell you, generally nowadays every bank provides the collection facility and discounting of bill facility. So let's draw the journal entry in the books of A. I mean to say the drawer. On 1st January 2012, B to sales rupees 1000, And on the same date, BR to B rupees 1000, and on 1st February 2012, bill for collection account debit to BR rupees 1000, and on 4th of April 2012, I mean to say the date of maturity, the bill is dishonored and the bill was with bank. So what will be the journal entry? B debit 1050 to bank rupees 50 to bill for collection account rupees 1000. You know, bill for collection account is cancelled on the due date, whether the bill is paid or not. And on 10th of April 2012, A agrees to draw a new bill on B. You know, before drawing a new bill, you have to pass the journal entry of interest. This interest is income for A but expense for B, because A is going to receive the interest from B. Naturally, it will be income for A. You know, all incomes are credited in the books of A. So what will be the journal entry? B to interest rupees 20. B has been debited by rupees 20. It means I'm going to make B debtor in my books. It means I have to receive rupees 20 in future from B, and then to interest rupees 20. It means today I have earned rupees 20 income in the form of interest. Now draw a new bill on 10th of April 2012. What will be the journal entry? BR new to B 1070, and then on the same date the bill was endorsed. So what will be the journal entry? C to BR new 1070, and on due date 13th June 2012 the bill was met. Naturally, there will be no journal entry in the books of A, because C has received the money and B has paid the money, and A has to do nothing with this thing. Now come to the books of B. I am to say the books of drawee. First of all, on 1st January 2012, suppose you are B, what did you do on that day? You purchased the goods on credit basis. So what will be the journal entry in your books? Purchase account debit to A. And on the same date, you accepted the bill. What will be the journal entry? A to BP, rupees 1000. On 1st February 2012, you get the intimation from A that bill has been sent to the bank for collection. You have nothing to do with this situation, so you will not pass any journal entry. And on due date, 4th of April 2012, did you pay money to A? I mean to say, did you go to the bank to clear your bill? No, you couldn't go. It means the bill was dishonored. What will be the journal entry in your books? BP to A. BP debit 1000, to A 1050, and plus noting charges account debit rupees 50, because noting charges account will be debited in your books. Ultimately, you have to bear this expense. This is your expense, but it has been paid by A or bank. BP account is always debited or credited at face value. What was the face value of bill? That was rupees 1000. So 2A 1050. So what is the meaning of this journal entry? Today there is expenditure of rupees 50. BP has been cancelled and A is your creditor by rupees 1050. 2A 1050. It means you are going to make A your creditor by rupees 1050. Then on 10th of April 2012, you agree to accept new bill. But before accepting new bill, you have to pass journal entry of interest. Interest is expense for you. So what will you do? Interest account debit to B, rupees 20. And then accept a new bill, B to BP, 1070, 1000 for bill, 50 for noting charges, 20 for interest. On 10th of April 2012, you get the intimation from A that the new bill has been endorsed to C. So you have nothing to do with that. On due date, you will go to C and you will clear your bill. So what will be your journal entry? That's standard journal entry. BP account debit to cash. I mean to say BP new account debit to cash 1070. In this way, journal entries will be passed in the books of A and B. Now let's make A's account in the books of B. On 1st January 2012, buy purchases rupees 1000. On the same date, 1st January 2012, to BP rupees 1000. On 4th of April, buy noting charges 50, buy BP rupees 1000. And on 10th of April 2012, buy interest rupees 20. On 10th of April 2012, to BP 1070. So in this way, the total on both sides 2070. The account is closed.